Hey traders, Raghee here, and in this free recap video I want to go over a setup that we talked about in a previous recap video, so y'all should be up to speed on this setup in Facebook. Now the setup in Facebook really is, for me, like trading a piece of the NASDAQ. So when we look at some of the heavily weighted names within the NASDAQ or even the S&P, what I'm looking for is, can Facebook eventually benefit from the continued rising tide of the NQ? And do I really want to bet against Facebook? Do I really want to short a heavily weighted name of the NASDAQ if it continues to punch up to higher highs? This is one of the strongest names we've had in the recovery since December 26 and January 4. And a reason for this is when traders think it's safe to go back into the water, they're going to go right back to the things that they knew were delivering all that great alpha before, right? In other words, what was paying them out the best, and it was going to be high beta, high momentum, and that typically was going to be tech. And that's one of the reasons we're seeing the NASDAQ benefit the way it is. All right, so when Facebook sold off, one of the things that I mentioned in that recap video was that Facebook was choppy, but it was moving down towards what we called oversold support. Been supported in this area before. I would anticipate it happening again. So we sunk down to this level, and what I mentioned is it's a great time to buy calls, or just generally, let's just get long. Some of you actually decided to sell puts. You could buy calls, get long, or buy, right, or sell some puts. And I don't want to bet against NASDAQ. I don't want to bet against that high tide, and therefore the Facebook buy off the support level makes sense. Again, it's like trading a piece of the NAS. And the stocks that I tend to watch and trade in the futures room are stocks like this. Stocks and sectors like the financials and healthcare, the communications, tech, industrials, names, discretionary, names that track with our futures contracts. When you have this kind of connected stock watch list, I don't want to look for uncorrelated. I don't want to look for disconnected. I don't want to actually trade things that are not going to be moving with the broader averages. Again, think of boats and tide. We want them to work with a lot of synergy. And this way, here's the other benefit from looking at the markets this way. You're not scanning thousands and thousands of stocks. Now, if you'd like to do that, go for it, right? Because now you're just going to scan a smaller pool of stocks. But I don't know anybody who says, yeah, I get to go scan through hundreds and hundreds and hundreds of stocks. To me, I'm going to be looking at every Sunday, every Saturday, maybe a list of 75 to about 150 names. And that's not really a lot. Normally, it's going to be about 6 or 7 dozen names. That's about it. Not a lot. And I know them so well because they're connected to the heavily weighted sectors and the broader average. I hope that makes sense, and I hope that makes trading the sectors and the stocks and the broader averages a whole lot easier. Again, it's connectivity. So let's talk about timing here for a moment, and also let's talk about price movement ranges. So the timing was this candle right here, and I find far too many traders ignore this beautiful candle and scramble into the market like a game of musical chairs in this candle. Anyone who bought calls today is 100% going to pay more than anyone who bought calls on this down red day. So that's number one, just the more easy, peaceful, and less expensive way to put this trade on. If you were writing puts, oh, for sure, you were collecting a whole lot more on that day. Now, if you just wanted to straight up write a call or maybe put on some sort of vertical, the inside day ended up being really a great alternative to being as directional, because that inside day allowed you to put on different kinds of trades. And maybe we'll talk about that in an upcoming recap video. But what I want to talk about here is price movement range and how you pay yourself. Because then what I know to do is head on over to Facebook on this platform that looks at historical price movement ranges, and I realize if Facebook moves up anywhere from about 5.5 to, let's call it 6.5, almost 6 3/4 points, I have a really good move that I likely want to take advantage of. Again, about 5.5 to 6 3/4 points. So once I start exceeding about that, exceeding that number, once I hit about 5.5 points, I know that Facebook is moving in a way that's on the upper end of its typical price movement range, and I'm going to be able to benefit in that call that I bought, day before yesterday, in a way that is better than if it took Facebook, say, 2 days to move 5 points or 3 days to move 5 points. Speed matters, right? So when I want to gauge how far have we gone and whether or not that's speedy, whether that's a pretty wide range, that's what I'll use. And I hope that's helpful. These are tools that we use every day in the room. This is the same setup we talked about. I just wanted to follow through on this with you all so you could see how we're managing this going forward. Another couple things that I'll throw in there, because some of you might be in this. My next target for Facebook, so my first target is 165.95. The second target, gang, we really want to go for it. See a gap close. The second gap close, quite frankly, and I'm shooting for 169.65. I'll see you in the next update.